Hi everybody. Today we're going to look at IBM. Here's the 10-year monthly candle chart, like I usually like to start off with. Start off by establishing where's my support. And this support has been some historic support around 124 level, has been retested 5-6 years later. It bounced off that, and for the resistance, latest resistance seems to be around the 180 level. So this is the current channel of bounce off support, bounce off resistance, and wiggling its way through. So this is what we have to work with right now. We could see a little while back there was a top formation here of resistance at 213. There was support at 176. There was a breakdown candle right here, this one here. I'll draw an arrow from top to bottom. I always like looking at the graphs and revisiting also what happened previously, and try to, I know hindsight's 2020, but try to keep honest with how I would have tried to do things back then. Let me scoot over here, get my black area. What is fun with my TWS software is I could actually pull back the time, and I could actually see how I would have done it. So I could even practice historically on any chart I have and just see what would have happened. Right now it's the IBM. Back then it was an upwards channel. Oops, sorry about that. It was an upward channel, and after that it started right here. If I extend that, it broke. It was still an upward channel, but right about here it broke out of it. This candle here, this one here decided to start going down, and then it started ranging for about 2 years. It started ranging. I would have probably done the same thing here, established my support, my resistance, add it down to breakdown line, and I would have put an alert here around the 176 area, and I would just come back and wait until I have a close under that. Time moves on. Oh, there's a candle. Alert triggered. Candle closes under the breakdown line. I would have put a bracket order. I would have done sell. Let's do it. We could do it. Yes. I would have put a sell order here. I would have done a right click. I would have done attach bracket orders. I would have set my bracket orders. What's the top of this candle? 190. Could have put my sell stop at 191. And my profit stop, I would put it at the bottom of this one, 138, let's say. And my buy limit, 138. So here it is. It's as simple as that. Triggered, month close under. This is my risk. This is my gain. Based on my risk protocols. This looks like it's 165 to 140. That's $27. 165 to 190. That's another $25. So it's a 1-to-1 risk ratio. Not optimal. I always try to look for at least 1 to 3. So my risk is 1 and my gain is 3. So even if I would be right half of the time, I'd still be in the money and positive. Look, this is a clean breakdown. Yeah, I'm not sure if I would have been in there. I would have probably waited for a better setup where I had a better risk to reward ratio. Anyways, the breakout's still valid. I'm just not playing it. Would have not played it. Let me just cancel those orders. Cancel. Cancel. There you go. And let's just move on. And then more candles. So now you have that to a 2.5-year top or 3-year. Then you're in here 1 month, 2 months, 3 months, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Okay, so 1 year later you would have been triggered. Maybe this one, depending where you would have put your sell stop. But this one for sure, you would have hit your target of the implied measure move. And that's a success story. 13 months is a long time to wait. A lot of things could happen, news, stories, whatnots. That's why it's very important to decide ahead of time. Always put in your exits, and your sell stop and your profit stop ahead of time, and you could just forget it. You just leave that stock and just move on. Scan other charts, reset your alerts, and that one's locked and loaded. If you did if you've been diligent and have done your homework properly, at this stage you're just a simple operator putting in some data in your trading software, and no emotions. Don't think about it. You won't lose any sleep. The delta here, that from when you enter to your exit, that's going to be less than 1% of your total NAV. So worst case, if you're wrong, you misanalyzed and you see these candles coming up, and let's say they would have went up here, trigger you out. That's okay. You just lost 1% of your NAV. And 1, 2, 3. See, you could have been humans. Usually, if you don't have those sell stops ahead of time and your profit stops, you've been in a stock for 5, 6 months. And then, I'm close to my target. It didn't get there. And then it starts going back up. And then it's, oh no, I'm going to get triggered out. This is when it gets nasty in your brain. If you haven't decided ahead of time, if you didn't behave like a robot, this is where your inner working on your inner self will make you grind your teeth at night. Do I exit? Do I double down? Do I get out of my trade? Is it really going to go towards the target? That's some crazy stuff, man. And the only way I managed not to do that is to either you're a robot and you have no emotional worries, or you just try to be as mechanic as possible and just lock and load and forget about it. Don't even look at the ticker. Do a social abstinence. Don't go on stock tweets. Don't go on Twitter. Don't look at anything. Just lock and load and forget about it. You have to have confidence in your mechanism, your classical charting principles, and that's what's gonna bring you through the day. Just knowing that all your trades are based on the same principles, and over time, with good risk to money management protocols, you should be in the positive. All right, so time moves on. You're out of the trade, and this IBM just moves along. This is funny. I did a Stan Weinstein in my early days of trading, for you guys who know it. And he works in stages on the 30-week moving average. This would, consolidation stage is stage 1. This would have been a stage 2. Top formation is a stage 3, which could either continue as a stage 1 again, as stage 2 again, or go down to stage 4. So now we see stage 2, stage 3, stage 4 very clearly. So IBM really respected that movement that Stan Weinstein has identified. I recommend reading his book. There's sound advice in there, and it's always good to see how Stan did it. All right, so now we continue, and then IBM keeps rolling ahead. So all the way to today. And here we are today with IBM. Back to where I identified how the pattern is morphed. That's that support, that resistance. And what else could I see here? Yeah. So there could be, on the shorter term, you could even have some support right here around the 142. put it over here around the 142 level. Price target here. Okay, let me remove a whole bunch of these lines. It's a little messy. What's next? Right now it's in no man's land. Just see. Sometimes I forget to look at it. RSI from top to top. Well, this is not a top yet. To be technically a top, you need the high, higher, and lower. And then becomes a top. High, higher, lower. So there, that candle considered top. So maybe eventually, if we have a lower candle here, this would be declared a top, and then you could actually compare it to your RSI, see if you have some divergence. Right now, doesn't seem to be any divergence with the price action. And here, bottom, higher bottom, higher low, higher low, higher low, higher low. No divergence in either direction. Alerts are set. Probably the measured move was going to be maybe this one, a little tighter. Whoops. All right. Okay. Copy, parallel. Bullish target is here. And let me draw my downwards arrow. All right. And here's my bearish target. So I need a close above the 180 to give me a target of 215, and which coincides also with the previous high on top of the mountain right here, 215. I like that. If it would have been a little higher here, I wouldn't have liked that too much, because it could have been that resistance here would have absorbed probably some of the price action and lowering my probabilities of reaching that possible target. And the downwards move, if I had it on, it would be down. If I have a break below 142, close, I have a target of 105. And that what I don't like about it is that target is below previous support of here that we had here. So I'm pretty sure there could be some congestion here when it reaches that, and another I can imagine there's going to be some support here, so it's going to be harder to reach that implied target. Sometimes when I see stuff like that, it's possible that I misread the chart and I relook to see if there's not another pattern that I should have been looking at, which would have given me a target that would have coincided with that support here, which would be a safer bet. It would be A++. But on the upside, this is an A++ trade right there. See, look at it again. Same thing here. Could have had some congestion at the 195, also 198. It's all good for now. There's no actual move. We're in no man's land. Seems to be still in a downward trend, but we'll still have to wait. I want to see how this is going to resolve this sideways move between 142 and 180, and see if we could play that on the up or on the down. Set your alerts and come back to it when it's time. I'm just going to drill down on the 5-year weekly. More of the same. Somebody could have looked there. Breakout here maybe to reach the top of the channel. Noise here. False breakout. You would have lost money. More patterns to play. More classical chart patterns to play on the weekly than on the monthly. But more of those patterns have whipsaws and might trigger you out. More noise. Let's go on the 1-year daily. Let's say I would have been looking that right here. This could be a bottom formation, and it could be breaking out, giving a target of what I don't like is just it's so not a tight pattern. I like the tight rectangles. Long rectangles go sideways. Short height to bottom. Those are I believe those give me a better probability of reaching my possible target and usually are my A++. Right now it's on the daily. This seems to be a breakout, and the target would be 182. And it's just working its way up. But remember, dailies have more whipsaws than weeklies, and weeklies have more whipsaws than the monthly chart. Is there some RSI? Oh, I see there's some divergence of the RSI between this high to high, higher high on the price action, and lower high on the RSI. Not A++ could give a sign that this might phase out and not even go to 182. Just need more candles. Be patient. Don't try to play everything. And the secret to not play everything is to look at everything. If you just look at a few stocks, you're gonna get the itch eventually, and you're gonna start playing trade setups that you shouldn't be playing. You want to avoid that. You want to stay as far away from that mentality as possible, and just scan charts. My best advice: set your alerts, reset your alerts, redraw your lines. Think about it a million times. Like my father-in-law says, you measure twice, cut once. And in trading, I'd probably say measure 1,000 times and cut once. It's your NAV's future, after all, that depends on it. I'll let you be for that. That was a long one today, but I hope you get some insight a little bit more on how my trading framework works. I have a whole bunch of more knowledge, information to share. I have it written down. Eventually, it's going to start coming out bit by bit. I can't throw it out all now. All right. Thank you very much, and see ya.